Hi, everyone. It's Matthew Haraburda, Chief Investment Officer. Just wanted to reach out to you as we've now wrapped up the first quarter to give our recap and then give our outlook for the remainder of this year. And while most of the headlines and most of the action really did happen in March or the last month of the quarter, I think it's helpful to rewind to the start of the year and think about some of the things that we were talking about. The start of the year was really marked by a lot of these headlines around AI and what the impact of that technology was going to have on all of the market, but you really saw it specifically within the software sector, and that called into question kind of the labor market and job growth and productivity gains. And while we've gotten away from that, it's could have been put on the back burner during March with the war and the conflict with Iran. I do think that that's something that's going to resurface as we get towards the next couple of months and next couple quarters, and we'll get to why. But obviously, the big news of the quarter, the conflict and the war with Iran, saw significant price increases across all of the energy markets. You saw oil trade over $100 a barrel at the gas pump for most consumers. I think that nationally, the average went from about $3 to $4. So obviously, you saw a very large acute increase in price over a very short period of time. Now, historically speaking, it really is going to be a quick spike up, and then it's going to be dissipation over time. And we don't think that this conflict is going to be any different. And one of the main data points that we look at for that, if you look at the futures market as to what you can buy a barrel of oil for in 6 or 12 months, it's significantly below the $100 per barrel that we're seeing approximately today. Again, so what does that tell us? It says that, in my opinion, that the market is comfortable with this is a short-term problem that in the medium to long term is something that's going to be resolved. So that gives us excitement, obviously, that this is not the new paradigm shift that we're paying significantly higher energy prices. And while we don't know when those prices are going to become lower, we do think that as you look at 6 and 12 months, that's going to become not so much the story, but appreciate that that really has been kind of the main headline for the first quarter here. So when we think about then, what do we think going forward? Well, there are higher energy prices here today. So there's no surprise that headline inflation is going to be up significantly over the next couple of months. That's to be expected. We can all see that energy prices are higher. So we're recommending people, and I'm going to be paying attention much more to the core inflation that strips out some of those energy prices. So I think that you're likely to see, as American households, their budget has gone up for how much they're spending on energy, you'll likely see some pullback in other sectors. So that's one of the main things that we're going to be looking at. And as we give our outlook for the remainder of this year, we do think that the labor market is going to be pulled much more to the forefront as we get past this period of conflict. Again, you're seeing major headlines come out of major Fortune 500 companies cutting their workforce. And again, I think a lot of those conversations we were having in January and February about the impact of AI on the underlying job market and the underlying then U.S. consumer, I think that that's going to become the conversation as we head in towards the second quarter and the back half of this year. Obviously, we have a lot to look forward to in the second quarter with the transition of Jerome Powell to Kevin Warsh at the Fed. We're interested if that's a smooth transition because Jerome Powell historically has been someone who's been very data dependent looking in the past, whereas Kevin Warsh is someone who's much more comfortable kind of pontificating and setting policy changes on what he thinks is going to happen in the future. So that's one of the main things that we're looking at in the second quarter of this year. And then again, please feel free to reach out to us at any time to review your portfolio. Again, thanks so much.